Good evening. Good evening. Welcome back. Welcome back. Thank you for joining us at Caribbean Diaspora Vibes. Hope you're having an amazing week. We are actually having a beautiful weather. Kind of strange, kind of cool early in the morning and then summer weather in the afternoon. So, but that's Florida lifestyle. We had scheduled for tonight St. Lucia Trailblazers, but unfortunately we weren't able to get our guests, and our diaspora liaison was not available for tonight. So we switched the show around to talk about home ownership, and not just regular home ownership, but second chance home ownership. And we're going to tell you all about that in just a few minutes. We're waiting for Louis Witter, who's coming on with Caribbean Rhythms Radio Network. He's going to be joining us. But let me introduce myself. My name is Donna Morton Morgan, and I am real estate broker of Florida Summer Homes Realty. I'm also the president of Caribbean American Diaspora Alliance, president of Women of Culture Inc., and life coach at Inner Vibes Consultant. So tonight we wanted to just finish up our Black History Month, talking about home ownership, talking about the obstacles that so many minorities are facing, and a lot of questions in regards to how soon can I buy after a bankruptcy, after foreclosure, and also after incarceration. As part of my nonprofit, I deal with second chance citizens, and those individuals are coming out and getting back into society. And, we want to make sure that those individuals have opportunities, have housing, because it is difficult, with having a felon and renting. So we think that the best way is to buy. And so we are teaming up together with Junior Simmonds of Enterprise Mortgage Group, and we are going to be approaching second chance. Oh, hey, Louis Witter just joined us, Caribbean Rhythms Radio Network. You're muted.
Hi, can you hear me?
Yes.
All right. Greetings, everybody. We want to invite you and thank you for joining us this evening. You're in tune to another edition of Caribbean Diaspora Vibes. My name is Louis Witter. I'm here with Miss Donna Morgan, and we're going to talk about mortgages and all that good stuff about this tax season now, Donna. And this is a good time to talk with our lenders and our mortgage brokers.
Yeah, I think so. And we were just before you got on, Louis, we were just saying Black History Month. We're also, as a minority, we are last in the poll as for home ownership. And so we were thinking of all the different ways that we can be a part of the solution, right? And so we've got people that have had bankruptcies, we've had people that have had foreclosures, we have people coming out of jail that all need a second chance. And right, so this is why the program tonight is called Second Chance Home Ownership. So we want to introduce to you Mr. Junior Simmonds of Enterprise Mortgage Group. We're going to have him tell us a little bit about who he is, his background, and then we'll be asking him questions about all the different loans that he can do to support this community. And Louis is a realtor also. What's the name of your company again, Louis?
Sunshine Real Estate Pro. We're down in Kissimmee, and we are experiencing the same thing. Our people need help out there, Brother Simmonds.
Yes, sir.
We are the last, as Donna said, in everything. We're the last to know about programs that are available for us. And by the time we get to those money done, finished, gone. We don't have anyone who are educating us about these mortgage program. We have teachers. I have a meeting today with the Osceola superintendent of school, and that's one of my questions. What's going on with even our teachers, who some of them we can't even qualify them, Black teachers for a home? And so it's all over the place.
Right.
Because our teachers are not making enough money. And of course, you're a minority. You have so many things going on. And so, my brother, we are going to depend on you this evening to give us an insight and some of the secrets that you have, some of the things that you're working with, and some of the, the creative ways. Sometimes when people say we have to get creative, they think of something illegal, but we're not talking about that. I think mortgage brokers are some of the most creative people out there, or should be, because of the market. So welcome.
Yeah, thanks for introducing. My name is Junior Simmonds. I own Enterprise Mortgage Group here in Central Florida. I've been doing mortgages since 2004 here locally.
And you sound like a yardie.
Yes, I have.
Oh, yeah, I said Donna.
Yeah, and me and Donna go way back because Enterprise Mortgage has been around since like 2005, 2006.
Okay.
But when the market changed back in 2011, I kind of closed it down and I went and worked for Secured National Mortgage. I was there for like 9 years. And what I think I've seen as the market, the rate becomes higher, the disadvantage of minorities going to a retail lender become worse and worse because they're the first one to get squeezed.
Yes.
So what I did is went out on my own. So I go directly to the lenders and get money from them directly, cutting out the middleman. So what that does, I can pass on better rate. I can sign up whichever lender I choose to, and we can get our borrowers to the table pretty quickly. Because one thing that we have to understand as minorities, not everyone understands our situation and understand the challenges that we face. For example, when you're talking about, like for example, green card. When you go to the bank, they don't understand if you're a citizen or you're a green card holder or they just don't really understand how it works. So, but what I try to do is try to put programs out there to pretty much embrace anyone. And the basic thing that I teach is there's a couple of things you look at. You have to have one, credit scores. For example, no scores are decent credit score. We got onto a 580 on our loan. At a 580, you probably won't get any down payment assistance. That down payment assistance comes around at 640. But we do have programs go there for a 580. We have program goes on lower than that if a person have enough money to put down, But thinking about the average person, when you the first thing you want to do is get pre-approved by a lender. Pre-approved meaning that you speak to a lender, you do an application, they look at your credit, they look at your income, and they actually look at it, not just hey, you're going to a bank, this is my score, this is what I heard. And then they give you a pre-approval letter. That really doesn't hold water. Because a lot of times people get turned down because of that very same reason, because nobody took the time to take their documents and look at them and to structure the loan properly.
Right.
One other thing that I do here at Enterprise Mortgage, most of the borrowers, especially China borrowers, I send them first to be underwritten up front. So while they're looking for a home, their file is being underwritten. That means when they find a home, we can go to closing for within a short period of time,
Yes.
Junior, I'm gonna stop you right there. So we can definitely, Louis, as realtors, how many times do we get pre-approval and the lender did not even really check anything? So we're driving around as realtors showing people homes and nothing was even really verified or looked at. So I'm glad that you made that mention of the difference that you do for at Enterprise Mortgage, because that's critical for us.
Yeah.
A lot of people don't understand the foundation of building wealth.
Yeah.
It's through housing. Because if you go back prior to 2000, the average price of rent was what? $1,200, $900. Those very same rent is now $2,400, $3,000. I've seen some ridiculous amount of rent I've never seen in Florida since 2000, 2004. And the driving factor in this is that a lot of people are moving. There's demand and there's supply. So as minorities, we tend to get, we're left in the dark, so to speak. For example, you look at somebody who's earning $50 an hour. They're bringing home $2,600 a month. How can you can ask them to pay a mortgage at $2,000? That's not even possible. So you have more people coming together now and trying to buy homes, you know? And I still encourage people to buy homes if you can, because inflation doesn't go down. It tends to go up, you know? Yeah. And the very same house that was selling in 2011 for $125,000 is now selling for $500,000. And a lot of folks have been left on the wayside because they didn't have the ability to grow wealth. They didn't have the ability to grow equity because they were comfortable paying rent, you know? And there's programs out there. For example, a lot of people believe that you have to put 20% down. No, you can put, there's programs out there you can put 1% down. Literally 1%. With decent score, you go to a conventional loan, the seller will give you back, the lender will give you back 2%. You put 1% down, you can negotiate some closing costs, etc. with the seller. You can have some money set aside from your retirement account, gift from family, etc. Because the reality in this market, you have to have some funds available to buy a house. You cannot buy a house with $0 in the bank.
You can't buy a house, I'm broke. That's bottom line.
You know, it's just like, for example, you plan to buy a car, you save to buy a car, but you want to buy a house on a whim with $0 in your account. That doesn't make no sense whatsoever.
No, not at all.
You know,
it's a setup for failure, and because the part that we don't talk about too is the maintenance of the home, right? And all of that. So we really would be we wouldn't be good representatives. We don't tell you that you do need some reserves, because you're not going to call the landlord anymore.
Right.
Yes. I have a term for that, my brother Simmonds. It's most of us plan, when we're getting married, we plan for the wedding.
Right. Yeah.
But we don't plan for the marriage.
Right.
The same thing, we only plan to buy the house, Donna, but we don't plan to pay the mortgage and to maintain the house as we buy it. We don't think about those stuff until we actually get the house. And that is an important part of it, to have. I even encourage some of my people as much as possible. I try to work with them from day one. You gotta have reserve. You gotta have your 2 or 3 months worth of mortgage. Once we figure out what the mortgage gonna be, I encourage my people to say, hey, you gotta save 2 or 3 months mortgage, because the lender wanna see that. They're more happier when they see money in the bank that is going to left over for you to at least pay the mortgage for 3-4 months going into the deal. And some lender, quite frankly, look on that. They love when you have that extra money in the bank, so that you're not just coming to the table and be broke, and the mortgage, you get 40 days to pay your first mortgage, but you're still going to be late, you know. So there's a lot to talk about in this mortgage business.
Right. And, you know, I mean, the first thing, as I mentioned, is to get a pre-approved. You know, the second thing is, you know, sit with your lender, make sure that you understand what your payment is, make sure it's comfortable for you. For example, don't go look at a $250,000 house and say you cap your payment at $1,400 a month. That doesn't make no sense whatsoever. Because reality and your vision doesn't really come close. You know, so you have to sit with them and find out exactly what can you afford. Okay, this is what I can afford. What home should I be looking at? You know, where should I be looking? You know, for example, you know, a $250,000 home right now in this market will run it probably $2,700 a month at a minimum. You know, so figure to get into that house, you have to have a income of around $6,000. Because they tend to look at 45% of your total gross income as your housing payment plus they'll add any additional payment that you have as a combined payment. So, if, for example, if you you earn $1,000 a month, your mortgage payment is $333. So $450, that's 45%. You have another $100 in car payment. Now your total debt to ratio income is almost at 55%. Is that workable? In some cases it is, and in some cases it's not. And that's why it's important to sit with the lender and to strategize. How do you get into a home, you know? One thing that I asked him to speak about this evening is, for example, what are some of the bar to buying a home? If you had a foreclosure, for example, 3 years ago, how does that impact you now? It really, if you're going to FHA loan, it doesn't. If you're doing a VA loan, 2 years is the maximum they look at foreclosure. If you're doing a convention, they go back to 7 years. But why it's not an even playing field? If you have enough money in the bank, you can get a house to buy 1 day out of a bankruptcy. You know, if you have 30% to put down with reserve, there's lenders out there that is going to what they call non-QM lender. That doesn't go by the standard FHA Fannie Mae. Will put you into a home. So the more money you have, the chances for you getting a home is much better. So for the average working person who does have a lot of money, it's a little bit more challenging, you know? So those are some that we have to address up front. If you have a bankruptcy, it depends. Is it a Chapter 7? Is it a Chapter 13? A Chapter 7 is that you go to your lender and say, hey, I just can't pay my bills. I got to write everything off. Then the court is going to want to see you, again, depends on the type of home, to be out of a bankruptcy at least 2 years on a VA loan, 3 years on a FHA loan, 4 years on a conventional loan. If you have a mortgage late, you can have one mortgage late within a 12 months period. That's forgiven. 2 is a little bit more iffy. You know, so that should not stop you from buying a home. Another thing that I run into a lot. Sorry?
As long as you can explain the lateness, why the reason you're...
Well, as long as it's, yeah, you know, 1 time 30 is acceptable.
Okay.
You know, if you have like 6 lates now with a 12 months period, you know, that's not something that Fannie Freddie Mac is going to do. But can you get finance outside of that? Yes, you can. You can go to the, what I call non-QM lenders whose guidelines are not set in stone, and they will lend you the money. But obviously, you're going to put more 30%, 40% down. You can get into a home, you know, more than like regards to your situation.
So, Louis, real quick, Louis, can you raise your volume up a little bit?
Absolutely.
And in the meantime, so we said if it was a bankruptcy, you have to wait. If you're going FHA loan, you have to wait like 3 years.
3 years, 2 years on a VA, 4 years on a conventional.
Conventional. And what was the first one? Was that a foreclosure?
Foreclosure, pretty much 3 years going FHA, 2 years going VA, 7 years going conventional.
Okay. So those. Okay, so folks understand that timeline. So a lot of times you did a bankruptcy 5, 6 years ago. You just heard that if it's an FHA, 3 years, VA, 2 years, conventional, 7 years.
7 years.
And while we're on second chance, because that's part of our second chance home ownership, people that are leaving. So I work a lot now with individuals that are leaving jail, coming out with a felony. We're working on getting them training skills, electrician, carpentry, CDL, etc. They have a hard time renting, right? Because you have a felony. So, you know, home ownership is really the best thing for them. What do you have to say for those individuals that are leaving incarceration and need to be kind of, you know, groomed for buying?
Right direction, yes.
Depends on a couple of things. For example, if you're leaving, say you spend, say, 5 years in prison and you're getting out, and you come out next week, you get a job, it's a full-time job paying you a full-time, you're paying a set salary or set hourly. You can actually bridge the gap with your employment before you went to jail. So you can go back 6 years ago and say, okay, I work at this place for the last 3 years before I went to jail. I have an absence here, because the guideline doesn't state that you have to have 2 consecutive years. It does say that you have to have 2-year work history. So you can go back before you went to jail, and you can bridge the gap. Now, it depends on if you're full-time, there's no issue. If you're part-time, that's when they're going to want to see a 2-year history of you working part-time. That way they can average out the income. You know, setting applies for somebody. I run into this a lot. Somebody, for example, moved from St. Lucia or Jamaica. They start a job here 6 months ago. They go to the bank says they got to work they have to have a 2-year work history. Not necessary, because you can go back to your home where you came from, and if you can document where you work before you left, that bridge your 2-year gap. It doesn't have to have 2-year work history in the United States. You just have 2-year work history.
And it doesn't matter where.
It doesn't matter where.
This is
as long as it's
FHA unconventional as well?
Anyone.
Any one of them. Okay.
That's good information, Louis.
Yes.
You know, like I said, I've started the second chance connected with Orange County Jail, Seminole County Jail, and I think this is a good way that we can be a part of. And there's actually a lot of, and you know, we don't discriminate, but there's a lot of Caribbean individuals in these facilities with lower level felonies that can come out and get CDLs. You know, someone that has a CDL job right now is probably one of the better paying. Your electrician, your skilled individuals are
construction, all of these works
right.
Paying good. So, you know, Brother Simmonds, what about let's look on the credit side as well too. What about for those who needs to build their credit, don't have much, maybe don't have credit? What about rent payment? Can that help in these cases?
Yeah, I mean, about a year ago, Fannie Freddie, they changed their guidelines. We say, hey, if you have a rental history,
yes,
and you show it, we can document the rental history by a management company or through cancel check, then you can actually add that to your report, and that strengthens the approval process for you.
Got you.
You know, I mean, and also in terms of credit, if you have one credit card for $200 and it gives you a credit score, that's sufficient. There's nothing in the guideline that say you have to have in-depth credit unless you start getting into the jumbo, the couple $1 million homes, etc. Where they want to see you have in-depth credit at a certain time. As long as is run through the system and you have what they call an approval eligible through the Fannie Freddie, the agencies, then you're good to go, you know.
So you can build from there. You can work with those credit.
Yeah, you can work. Yeah,
definitely. Brand new. I talked to a young lady just a couple weeks ago, right? And this is on, you know, right now there's a lot of teachers coming up from overseas, from Jamaica, looking, they work here. They're on this J1 visa program.
Right.
What do you have in place? Because a lot of them been working for 2 years now. They've been working as a teacher back in Jamaica. Let's use that as Jamaica as an example, because that's where I have talked to a few people. So they've been in the field for 5, 10 years in Jamaica. Come up here. Some of them have 1 year, some of them have 2 years. They have been living with maybe a cousin or uncle, and they save their money. So they have a lot of money ready now. Maybe you have a good $20,000 in the bank ready to put down money, or $10,000. And a lot of these teachers are working $4,000, $5,000 a month. What type of program is there? Any program for these people who are on these type of J1 visa? Because I noticed there's something, but give me your opinion.
J1, I'll take it specifically. But in general, when you have what I call a non-resident visa, as long as you can document that you have a work permit, it's continuous, yeah, they allow you to do an FHA loan without any issues, you know?
So that is the key. It have to be a continuous.
Yes, I got to show that it's continuous. I mean,
Continuous.
for example,
Yes,
the assumption is that you're going to have a job for the foreseeable future.
Yes.
You know, and if they're showing that you have renewed your work permit, it shows that you're stable, then there's no reason why you can't get a loan. You know, FHA loan and some conventional loan, what they call like home ready program, it does allow for a non-resident alien to purchase a home. Yeah.
Yes. So those are good. Quite a bit.
I have a quick question about 401. A lot of people here don't understand the power of their 401k, right? They say they have no money. And then when you say, do you have a 401? Yeah, I have 60, 70,000 401, but they feel like they don't want to touch it. What do you think about, Junior, let us know how, you know, what would you tell someone that has a 401? Is that a good option in your mind for buying?
It's a good option because a 401k allows you, when buying a primary resident, to pull funds out and repay it over a 15-year period. And you're paying back yourself the interest also too, you know. So it does allow you. So what you need, for example, make sure that you're vested in the money that you're trying to take out. Make sure that the terms of withdrawal, for example, in a contract, does allow you to borrow that. Because one thing the underwriter want to see is under what terms can you withdraw that money out, yeah? But more than likely, if you're buying a home, they want to see a contract, they want to see the a cost estimate, and then once you send that to your 401k, then they'll go ahead and they'll disperse that money to you. The underwriter is going to want to see the track record of the money coming from your 401k coming into your account, etc. You know? Yes, it's a good source of funds to use. Yeah. And if you look at say, for example, the growth in the housing market, probably 100, 200, probably sometimes 300% over the last 3 years.
Right.
Your 401k does not grow as rapid. Long term, it will, you know, but short term, you're better off because the advantage of buying a home are very significant. One, you get to write off some of that interest that you're paying. So you're not just paying someone money and it's going down the drain. If you're paying $1,000 a month for the last 10 years, you have just thrown away $120,000 without any benefit of you throw $120,000 away, but then you look at the other things that you didn't benefit from. You didn't benefit from the interest saving. You didn't benefit from the growth in equity. So it's more costing probably $300,000-400,000 that you have thrown away in the last 10 years or more, by not per personal home.
So for those educators, Louis, for those educators that you talk about, medical, anyone that really have that 401k and think they don't have any money, you've got money to use for your first time. And speaking of first time homeowners, what's going on? Tell us a little bit about the heroes. Wait a minute, Louis, did you need to take a station ID?
Yeah, let's do that. We want to welcome you this evening to Caribbean Rhythms Radio Network. You're live on CRR-FM. And today we're talking to Brother Junior Simmonds. He is the president and also the mortgage broker for Enterprise Mortgage. We're talking about second chance, giving everyone a second chance with buying a home. Myself and Miss Donna Morton, we are realtors in Central Florida. And we encourage you to call us. Our number in the studio here is 407-676-9023. If you have a question for Junior, we'll certainly put him on the air and get your question answered for you. You are in tune to Caribbean Rhythms Radio Network.
Wonderful, wonderful. So we know that a lot of money came out for the Heroes program. Can you give us a little snippet for the second half of what the Heroes program and who qualifies for the Heroes?
Okay, the Heroes program was put up by the state of Florida for folks who work who as an employee based in Florida. And what it does, it gives you up to 5% of the purchase price towards your down payment and closing costs, you know. Great program. The only issue is that they keep running out of money. So as they have funds, it's gone. It's gone. 100 million goes just like that, you know. But put aside the Heroes program, there's always additional programs out there that can assist you. For example, if you have I'll just give you an example, say a 680 credit score. Decent ratios, debt to income ratio, you can actually get a program where you put only 1% down. And the lender will give you back 2%. Because a 3% program, they give you 1%, and it gives you great interest rates, and it gives you better interest rate that you'll find on the Heroes program actually, and the mortgage insurance is much cheaper. So that's a good way. And in the market that we're in right now, and I can't speak for the realtor, but I think some people have to pay some kind of closing costs to get their house off the market. So if you can have a seller who's going to contribute something while you're closing, you can get some money from your from your saving. You can actually get a gift from a family member. You can actually get into that house with 1% down and that additional fund that you will need for closing. You know? And these are very good options that you have. On an FHA loan, you can do actually 3.5% down. And there's options out there that you may be able to get 3.5% back from the lender. But I don't push a program a lot because the only way it's workable is the seller have to contribute about 6% to make it work. You know, so it's like a catch-20, you know, like you give a little, they take it back from you. So I don't push that program a lot.
Okay, but it's there.
It's there if for the right person.
Got you. All right. Seller have to give 6% towards closing costs.
Yeah, because what they do is that they say it's 100%, but then they increase the fees, the rates, everything to make it make sense for the lender.
Right.
You know, so that's the only way those program works.
Let's talk about VA, those veteran programs.
Okay.
I for example, I have a VA gentleman right now. We're talking to him, just start talking to him, and his credit score, he's looking to buy. And obviously, the first thing I want to do is to put him on to a lender. But he said something to me that his credit score is under 580. What type of program are there out there for vet? Can a veteran still get qualified with under 580 credit score with any of your programs?
Yes, he can. And again, it's going to depend on what is on his credit. What is causing his credit to be a 580? You know, is it a lot of late payment on credit cards? Is it that he's just using up the balances on his credit card too? So a lot of time you can look at that credit and say, pay down the credit card to X amount and it'll bump him up.
Yes.
So yeah, so the VA, I mean, you can go down to a 550, 535, you know, pushing it a lot, but it's a little bit more challenging. The rate's going to be a little bit more higher. And the ratios are going to be a little bit more restrictive. So what I'll tell someone like that is that, okay, first of all, where are you looking at your credit score? Is it Credit Karma? Okay, if you're looking at Credit Karma for your credit score, you're looking at the wrong place because the lender use FICO score. Credit Karma use what they call Vantage score. So it's a whole different matrix. So your score may be higher, it may be lower. You may be looking at one credit score, the lender looks at 3. So you may have a 550, a 640, and a 610. They're going to go with the 610 score.
Yes.
So I highly recommend that someone to look at the credit score. I don't know why sometimes people are afraid to pull their credit. If you want to do business, you got to pull your credit.
Yes.
Because that's the only way you're going to know where you are so you can build a base and know how to improve your score.
Got you. Now, explain to our listeners, what are some of the benefits, brother Junior, as a VA, as a retired veteran, what are some of the benefits that they get from buying a house from a mortgage?
Okay, the VA loan is actually one of my favorite programs. One, because I'm a retired vet myself.
Okay.
And two, the benefit is that one, it gives you 100% financing. 100% financing doesn't mean that you don't pay closing costs.
Yes.
So you still have to pay closing costs. A seller can contribute up to 4% towards your closing costs. Also, too, if you are typically you pay what they call a funding fee. For probably 2.3, it's very hefty. But if you get any kind of disability from the VA, 10% or more, that funding fee goes away. So you don't have to pay that funding fee, Right. So that so it gives you can buy because there's no mortgage insurance, the rates tend to be better. It's just the loan to value, 100%, and the ratios tend to be much higher on a VA loan. So if you're a veteran, that's the loan that you should be doing,
Got you. Awesome.
But you heard that. So you still need money because people get
need
stuck
closing
on 100%
100%,
financing, So we
Mm.
still need to prepare to have money. We need to prepare to have reserves. We need to prepare to have maintenance. After, you cannot call a landlord and say, come fix this leak, this plumbing, this electrical. There are warranties that we as realtors will offer and have the sellers to pay. But you still need to have that in mind when you're buying a home, because for some people it's like a shock. And this is wrong and this is wrong. Did we mention gift, Louis? Sometimes people, they don't have the money, but maybe their parents can gift them. How is that an option, Junior?
Yeah, you can always get a gift from a family member, close friend. You have to document the friendship. It depends on the program too, because if you're doing a conventional
close
loan,
friend, because we've been only doing sisters, brothers, mother, and father.
That's where FHA guidelines states.
That's FHA.
It does mention that if you can document a close friendship, you can document, hey, we went to school together. We can document pictures and document things. Actually, FHA tend to be a little bit picky. Conventional, what I tell people, get a gift. You don't have to source. For FHA, you have to show where the money is coming from. For a conventional loan, you don't have to show it. Get a gift letter, wire the money at closing to the title company, and you don't have to document where the source of funds are coming from.
Oh, interesting. Very good.
Yeah, give you a little bit more flexibility.
Yes.
But if you have a buyer who's getting a gift from a family member, a lot of time the family member don't want to show their bank statement. They're very so it's okay.
They want that, yes.
Right. Sign the gift letter, wire the money to closing to the title company on a conventional loan, and we don't have to worry about where that money is coming from. FHA is a little bit more picky. You have to show where the source of funds are coming from. So the donor have to show that they have the ability to give that gift.
They have to see that bank statement.
Right. Yeah, they have to see that bank statement. And it can be a deposit $3,000 yesterday, and I'm giving a gift $3,000 tomorrow.
Have to be source.
Yeah, it's got to be. It's got to make sense. Because the underwriter know what people does. They give the family member a gift. Money and says a gift.
Yes, from one hand to the other.
Right.
I have a veteran in the studio. His name is Ori. Ori, I have a question for you. Ori, you can use this mic. Hold on. Let's see.
Yes, sir.
He's a retired vet.
How you doing? My name is Rory. I have a degree in economics and finance, and I've been doing a lot of researches on home mortgages and stuff like that. So I'm actually reading a book to the Power of Zero that was written back in 2011, who was the CFO
Come up to the
of
mic.
the United States.
Mhm.
He was actually the accountant for the United States for Bill Clinton and Reagan. Back in Reagan time, they passed a law for any provincial income, whether you're real estate or what have you. When you retire at 67, the provincial law actually taxes you on certain assets. Like I think there's 6 or 7 different vehicles. It's in a book called The Power to Zero. So all these folks that are veterans and business owners, they don't realize that their net income isn't just what they're making from their Social Security or the disability. The actual Social Security also includes 7 other vehicles. When you retire, you're going to be taxed at the highest tax bracket. And the tax of the highest bracket is 55% of all your provincial incomes, including your Social Security and any other residuals you get from rent, businesses, and your 401ks. It actually is going to take effect, I think, 2025 or 2028. So the baby boomers are going to get hit with double tax. It's in the book called Power to Zero. That was the CFO. He wrote the book when he quit in 2000 after Clinton. He wrote this book. So everybody that's online, VA, whatever, they have to get these books and learn about how to set up your tax through a land trust or a regular trust with an actual lawyer to avoid paying for 1,000 years, because this is what the Rockefellers did and the Rothschilds. That's why the Rockefellers made $77 trillion, and it's wealth generation that passed forward through the trust.
What is your question?
The question I have is the Hometown Heroes, is that still active for the veterans and the 100% veterans that pay no property tax for life once they're at 100%, as well as anybody, I think, over 70%. What's the tax difference on that for the real estate? There's a place in Michigan that also offers like Wounded Warrior to get a house, and they will fund it, build the house, and then those veterans that are wounded, they get a house with no tax, as well as a homestead tax and a farming tax. If you have more than 3 animals on your property, you pay no property tax.
I think there's no tax when you purchase.
Well, I think
in Florida, correct, Judah?
yeah, if you're a 100% disabled veteran, and then you don't pay taxes.
You have to
You don't pay
be
property tax,
disabled.
right?
You have to be
Disabled
disabled.
veteran. Huh?
Okay. You have to be disabled to
Yeah,
get-
you have to be 100% to the VA,
Mhm.
and then that tax goes away, you know.
Okay.
The rest of things that you touch on, sir, to be honest, I'd have to read up on that, because I can't tell you what's going on in Michigan.
Yes.
You know, I cannot tell
Right.
you.
Yeah, it's called The Power of Zero.
Yes.
David
Yeah,
McGrath.
yeah, it does make form zero. Yeah, I'll definitely take a look at it, sir.
So as far as, I think we did touch base though on VA loans, that it was 100% financing. So to confirm that, and then that, yeah, 100% disability, you pay no taxes, but that's with your tax appraiser that you'd have to contact. So that wouldn't be with your lender.
They are pretty much
But the tax.
once you have your we call it now your disability, you go to the property appraiser type, you file the exemption, and there's a part on it. So if you're 100%, you get it's written off. If you're 80%, 10%, then there's still a certain amount that is still given to you, you know. So it's best to file exemptions, especially as a veteran.
And then when you do the mortgage, that percentage is taken off from the mortgage.
No, it does not. Because
No?
typically you qualify them based off of the taxes that is on the property now.
Mm,
You know, because typically if you purchase a home now,
right.
you file homestead, but homestead you file by say March of next year. That homestead doesn't take effect until November of the following year.
Okay. So if you do homestead this year for March, before March, it take effect next year.
In November of the
In November of
Right.
2025.
No, 2024. Because this is when the tax.
24.
So for example, you purchased a home in December last year. By the
Yes.
31st of December, you
Mhm.
file your homestead within the time frame.
Mhm.
Then when the tax bill comes out in November,
Got
that's
it.
where they get the tax break.
Mhm.
Awesome. Good information. I think we definitely went over underwriting guidelines. We went over second chance. We went over how to buy again after bankruptcy, foreclosure. Great tips for people coming from incarceration, that you don't have to come out and then do 2 years. You could have done 2 years prior if you're full-time prior to incarceration. So lots of good information to get people motivated to buy and to be able to come back and buy, even if they had a foreclosure years ago. I would definitely suggest taking classes. And a lot of times the foreclosures, I think, probably happen because lack of knowledge on the maintenance of the housing, right? Or even having the reserve. So it's important because things change, things can shift, and you're out of work for 3 months, 3-4 months. So, and then bam, you're in foreclosure just like that. Okay, so these are things that we don't want to come on here just to tell you, oh, no money down and give you frills. You need to have money. You need to have reserves. You need to have, because it's in your favor. The lender, the underwriter is going to look at you more favorable with those things, even though there are programs for assistance, but you still need to have some funds in the game. And that's the mindset shift that we need to change, because it's going to benefit us in the long run. So, Junior, I think we talked about 401k, we talked about visas, gift. For those people listening right now that need renovation on their homes, can they contact you?
Yes, they can. We have renovation programs that will, put in a new kitchen, new bathroom. They'll do quite a bit on your homes. It's a refinance.
Okay.
And of course, the rate is going to be a little bit higher. But if you need a roof, you need a new kitchen, new bathroom, that's a way you can go, to do a renovation loan.
Okay.
What about somebody who want to do a refinance or ELOC loan? Can we talk about real quick before we go?
Yeah, we do. And I do those. We do refinances. And a lot of short time, you look at, okay, I'm at a 2 point something right now. Does it really make sense for me to refinance? So we look at what they call a blended rate. Yeah. Blended. If you get an ELOC versus a rate that you have, we combine both together. What is the overall rate you're paying? Yeah. And I tell you, don't get stuck on this 3% or 2.5%, because if you're stuck with 20 and 30% credit card, and you have a lot of them, it's not doing you any good, So you may want to look at all your options. Look at whether it's best to refinance, is it best to do a home extra line of credit. For self-employed people, I know there's a lot of challenges out there for self-employed people also too, but we have bank statement program. A lot of times self-employed, they write pretty much everything off. We can do people who are here without with a tax ID. They can get a loan done by doing what we call a tax ID, a TIN loan. Yeah. So there's a lot of different options out there, people who own investment properties. There's a lot of options out there to even if you have no income on an investment property, if you have enough equity, more than likely with decent score, you'll be able to refinance those properties. So if you find yourself in a jam and you need to put money into investment property, those are options that you have available.
Got you. All right.
And commercial loans.
Yeah, I do commercial loan, but pretty much owner occupied, like daycare, if you own like an office complex, not major. Right. Just small a mechanic shop. Yeah, a lot of time you go to the bank, they're not going to do those loans for you.
What about churches? Somebody trying to church.
It's two things lenders don't like to do. I think most of the lenders, they don't like to finance churches, and they don't like to finance funeral home. Yeah,
That's
I'm not sure
crazy, isn't
why.
it?
Yeah. You know,
I told them church of millions of dollars, they have to go buy cash.
so some like that is maybe more like a community bank that will do that. Yeah.
I got you. I got you. All right, sir. Good enough. Good enough. Thank you. Thank you, my
You're
friend.
welcome, man.
All right.
So tell us, when you got started, give us a little history. You know, we know you're from Jamaica. We know, tell us your background with before Enterprise Mortgage Group, with Security National Group, so people can know how long you've been around in this business.
Okay, we'll go back. Donna, you were there. Okay, we'll go back from 2004. Because you're the one who actually introduced me to the mortgage business.
Mhm.
But then, and I opened Enterprise Mortgage back in 2004 when I didn't even know what I was doing. Yeah, I had an MBA, had a concept in mind. I went to open it. We grew up to like what 50, 60 people working for the company. But one thing I realized that or is not the best thing sometimes, you know, especially in our industry, because people don't want to come to work, but they want 100% of what they didn't work for.
Right.
So I've toned it down a lot. I've grown wiser, you know. So I've toned a lot, and I've focused us on one-on-one. If I find good loan officers, I'll bring them along. If they don't want to work, I'll let them, you know, because it's a tough job. You know, most of them working 18, 19 hours a day just to get loans through the door, put them and get them efficiently done, you know.
Yeah.
But when I got in the mortgage industry, I was working for Chase, I think for about 5, 6 years. I went and did a stint at Department of Defense. I didn't like that. So once I finished up my my MBA, I decided I just want to go on and I want to do my own thing. So I've been doing that ever since, you know. And I've always been doing this consistently since 2004. You know, I enjoy it. I love what I do, and because I realize that there's a gap to be bridged.
Amen.
Because the bank is not your best friend. If you have a couple $1 million and in the bank, yeah, you can walk in, and but the difference, the people who you speak to in the bank is not going to be the same teller who's trying to get you to open another credit card or another bank account. And you go behind the scene and you go to the we call it the investment bankers, and they're the one who get these people their loans. You know? So the biggest turnover of loans is our people going to the bank because we're misled. Somebody speak to us, they take some basic information, they ask to open a credit card and and another account, and they don't take facts. So pretty much they give you a pre-approval letter, nothing is verified. You go on a contract, then your loan get turned down. So you want to make sure that the person you're working with is asking you for these documents, is going through and making sure that you're properly pre-approved. I mean, I went up a tantrum a little bit. Sorry about that.
No problem. All right. So that's definitely a lot of years of experience. Louis deals with his radio station, covers pretty much all of Florida and beyond, people coming in. We get to meet people from the diaspora, all the way from the Caribbean diaspora, African diaspora. So, any questions that you if you're listening or even live, or this is recorded anyways, feel free to reach out to us so that we can answer any questions and put you in the right direction, work on credit score, getting you up. Sometimes it's just a little tweaking just to get you from that 620 to a 660 or 680 to get you better rates, etc. So let's look at this. Let's not just focus on zero, everything zero, because zero costs. Let's definitely build out a plan for maybe a year if it's not right away. Get some reserves and set you up properly, set you up for success, set you up for a long-term home ownership, and not a year and then you're in problems, right? This is what we're here for. We're not just here to give you this bubble. We want to inform you correctly. So that's our job. on the program for Hope for Housing and targeting our second chance home ownership. Whatever the problem was, divorce, bankruptcy, foreclosure, incarceration, you just sold it because you had no idea the responsibilities. You're ready to buy again. Give us a call. There's myself at 407-810-6520. Louis, Junior, let's get your phone numbers and your website information also, please.
Brother Junior,
Yes, sir.
go ahead and give us your contact number.
Okay, my phone number, my name is Junior's phone number is 407-474-4376. Once again, it's 407-474-4376. You can also go to my website at enterprisemtggroup.com.
Awesome.
Enterprise as a car, mtggroup.com. And you can find my website there also too, okay?
All right. Thank you so much.
Wonderful, wonderful. Simon Day, did you have any questions for us before we end our program this evening?
No, not exactly. I just wanted to thank Mr. Lewis and Mr. Enterprise.
Yes, thank you.
Great nuggets of information. And if I have any questions, I'll contact you through our host, Donna.
Amen.
All right, thank you.
But I mean, I'm really so grateful for the information because it makes me think very differently and out of the box. Because if we have a mortgage person and realtors in the home, instead of even thinking of a personal home, I'm even thinking commercial.
Yes.
Why not?
Right. Awesome. And you're in the medical field, so definitely put the word out there, or anyone,
Yes.
that we're here. We work as a team, right? So
Yes. That's exactly what I was thinking about because if I'm not ready now, but at least there's some people who are ready, but they
right.
just don't know where to go, who to talk to. So this is really a great platform. And I thank you all for this.
Thank you.
I really do. I appreciate you all.
You're
Thank
welcome.
you, Mr. Lewis.
Much, okay?
Thank you, Mr.
Thank you,
MG. What's your name again, Junior?
Junior Simmonds.
Oh, Junius.
Yes.
Oh,
Simmonds. Simmonds.
Louis?
Simmonds, okay.
All right. Thank you so
And
much.
Queen Donna, thank you.
You're welcome.
Thank you. Okay?
All right. Coming up next, Donna, we're going to have the Soccer Ed's Ball Talk. So for those of you listening out there, tune in to CRR-FM for Soccer Ed's Ball Talk. All those footballers from Yard and all over the place is the best place to be tonight. Please log on. Thank you so much. We'll join Donna again next week right here on Caribbean Diaspora Vibes. I want to thank our special guest. God bless you, and we'll catch you next week.
All right. Thank you very much.
Thanks.
Okay?
Blessings.
Right, my brother.
All right.
Good night.
Thank you.
Bye.
Until next time.
All right.
Thank you.
Bye.